What's up, traders? Welcome to today's Equity Empire Chart Analysis session. When most investors are throwing darts, we're looking for clues in the charts. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, instead of setting up a new trade, we're going to go back and review a trade setup, a video I posted a little over 6 weeks ago. And that trade setup was on Arista Networks, symbol ANET. And when I set up that particular trade, ANET had started an uptrend. And as you can see by the blue choppy line here to the upside with the arrow, that was my projection as to how the trade might play out from this last candle. So that trade setup, we were looking for a pullback to 96.26 support level and a bounce off of that level to continue higher to one of these support resistance levels. Okay, and that was very interesting because it played out almost exactly as expected by the blue choppy arrow line. So it literally pulled back and not only headed higher, but it headed substantially higher. And we closed today, or we're currently trading at $133 a share, up 15 points today alone. Okay, so there's only one small problem with that setup, and that problem with that setup happens to be a biggie. We didn't get filled. So price did pull back, but if you notice that it didn't pull back all the way to 96.26, it only pulled back to 97.28. So we missed our entry by about a point, and because of that, we left $37 on the table. So we were only going to risk about $4 a share, and that would have been almost a 10-to-1 reward to risk trade play out. Okay, so what we're going to do here is we're not going to beat our head against the wall, although that might be your first reaction, like being penny wise and pound foolish, or saying, oh my gosh, I shouldn't have been so price sensitive there, waiting for so much of a pullback. Well, we're not just going to start chasing as stocks break out to new highs now. That's not the message of this particular video. This particular video is, was there a way that we could have looked for a different technical clue for an entry point that we would have been filled and we would have gotten most of those 37 points to the upside? Now, it wouldn't be a support level because this was the first support level to consider. It was actually pretty close. Actually, it was actually about 5 points away from current price at the time. So we were hoping for about a 5-point pullback. And once again, that was the first support level, and that's the one we chose for that video. Now, was there a different technical clue that may have gotten us into that trade, and we'd be sitting on a 30-something point profit at this point? So let's see if there was one. And what I'm going to do now is I'm going to go back. So the day before the video, so this green bar here to the upside, up to 101, that was the closing price when I did that video. This video here, that's what it looked like. So before that day, let me pull up the chart and see if there was a resistance level. So there was a resistance level, okay? Let me draw that one right here. So the day before that breakout, there was a resistance level right here in the 99.34 to 97.12 price range, okay? So what we could have done is that was the breakout point. So that day, the day of the video, we broke through that. We just blew right through that resistance level. Now, when price blows through a resistance level that happens to be a resistance level that is held multiple times, it held there, it held again in early June, it held again in mid-June, and then we finally broke through it the day of the video in late June. Okay, so what can happen is instead of waiting for a pullback to a support level, you might what you can do is if price blows through a resistance level, this is called a flip trade. So broken resistance. This is an old technical trader's cliche, but old broken technical resistance becomes support. So you might just consider turning that resistance level and think of that support now. So your entry point could have been the top of this red X resistance level that's now support. And you would have been filled and almost stopped out, but you would have stayed in the trade. So entry would have been 99.34, protective stop just below 97.12, would have entered at 99.34, stayed in the trade, and would have been still in the trade if you trailed the stop all the way up to right here, where we're currently trading at 133. Okay, so that is a trade setup that I haven't done yet in these sessions, but it's very important whether you win on a trade, or whether you lose on a trade, or whether you miss out completely on a trade like we did on this one. It's very important that if you learn from every single trade you set up, that it doesn't matter if you win or lose or miss out. As long as you learn, you're winning. So it's not a win or lose proposition, it's a win or learn. So today's exercise, this video was a learning video. I think there's a lot of value in this, so I hope you got some value out of it if you're new to trading, or just a different way to consider an entry point if you've been trading for a while. So let's wrap up today's session, folks. Hopefully next time we'll have a couple different ways to consider entering a trade, and ideally we'll bag the next 10-to-1 reward to risk trade setup. So I'll be doing more of these trade setups going forward. In the meantime, wishing you the best of luck in your trading and investing, and we'll see you soon.